is 21762. Introduction. Foreign direct investment and domestic investment has a macro and microeconomic effect on the country's economic growth. At the macro level, it benefits the real economic sectors such as investment, export, and economic development, while at the macro level, it fosters the technical spillover and manpower training, as well as improving the management skill. The interaction between foreign and domestic investment is crucial, and both can destabilize the economy. The research background. In Malaysia, numerous studies have been conducted on the relationship between the foreign direct investment and development, as they play a significant role in increasing domestic capital accumulation and generating economic growth. However, based on Dwasa and Pradhan, the connection between foreign direct investment and growth is not solid because there hasn't been much research on the effect of the foreign direct investment on the domestic investment. The role of the domestic investment in fostering growth and job creation has been well known because it has contributed more to Malaysian GDP than the foreign direct investment for more than 5 decades. The findings of the study show that the relationship of this economic component and also come up with the recommendation that can be taken by the government to improve the investment policies. The importance of this study. The domestic investment has a relationship with the variety of the global variables, prompting countries to attempt a direct investment decision and build an environment conducive to sustainable growth and wealth maximization. Foreign direct investment is also important to study because several observation studies find that foreign direct investment boosts host country factor efficiencies and income growth above what domestic investment can usually achieve. In this study, we will analyze the relationship of the Malaysian economic growth with the foreign direct investment and the domestic investment. Not only that, we also will come up with some recommendation, and it will be discussed in order to help the policymaker to improve the current policies related with these studies. Research objective. This study is held based on some objectives. The objectives for this study are as follows. First, to analyze the relationship between the foreign direct investment, domestic investment, and economic growth in Malaysia. Second, to identify the recommendation and suggestion that can be taken by the government to improve the current policy.
Conceptual framework. Foreign direct investment occurs when a foreign corporation develops foreign business operation or acquires foreign business properties. Foreign direct investment are most generally made in open economies with a qualified workforce and above average growth opportunities for the investor. It can also contain management or technological requirements. The main foreign direct investment is to gain controlling interest in company. Okay, foreign direct investment is not directly linked to the investor market. Domestic investment involves non-residential investment, which is refers to capital investment by business such as tools, equipment, and factories. Finally, turnover in inventories or stock refers to the change in company inventories over time. Inventory, also known as storage, refers to products that business manufacture but keep in order to sell later. Literature Review Dwasa 2007 found no proof of a causal association between foreign direct investment and economic development in her research. However, the findings indicate that a foreign direct investment is a critical stabilizing force for Malaysian economic development. Similarly, economic development helps to maintain foreign direct investment inflow stability. Barrow and Saleh Martin. Instead of declining capital gains in the long run, FDI can only boost economic growth in the short term. Long-run economic development, according to this viewpoint, is only feasible with exogenous labor force growth and technical advancement. The Mello 1999. This is the contribution of FDI to capital investment and the introduction of advanced technologies to the host nation has a significant impact on economic development. When technology transition contributes to the creation of additional stock of expertise growth, labor training, and skill production, foreign direct investment will directly stimulate economic growth.
Assalamualaikum and a good day to our lecturer, Professor Noor Azni, and to all my friends. My name is Muhammad Fikul Naim bin Muhammad Amiruddin. My metric number is 262093, and today I will continue to present chapter 3, which is methodology. As you can see from the slide, this is our model of preparation. Okay, for the data resources, we collect the data from Department of Statistics Malaysia and the World Bank data. The data collected as a time series data starting from January 1989 to December 2019. Okay, for the method of data analysis, we use the augmented Dickey-Fuller test and correlation analysis. Okay, now let's have a look at the stationarity test. Okay, macroeconomics time series data organized chronologically may not be stationary. This denotes that the presence of a persistent stochastic trend that persists across time. So, it is necessary to determine if the time series data in discussion are stationary or not. Our research, we use the augmented Dickey-Fuller test to employ an econometric approach for empirical analysis. Okay, for correlation analysis, method of correlation and regression can be used in order to analyze the extent and the nature of the relationship between the different variables. Correlation analysis is used to understand the nature of relationship between two individual variables. For our paper, we aim to study the effect of foreign direct investment (FDI) and domestic investment (DI) towards Malaysia's economic growth. Okay, correlation coefficient R is calculated through the following formula. As you can see, where X and Y are value of variables and N is the size of the sample, the value of the correlation coefficient can be interpreted in the following manner. If R equal to 1, then there is perfect positive correlation between two values. But if R equal to -1, then there is perfect negative correlation between two values. If R equal to 0, then there is no correlation between the two values. In Pearson product moment correlation, the correlation coefficient is not robust due to the fact that the strong linear relationship between the variables are not recognized. The correlation coefficient is sensitive to outlying point, therefore the correlation coefficient is not resistant.
Hi, Assalamualaikum. My name is Azrin binti Ilham and I will continue the presentation with our empirical analysis and the result for this study. So, for the first one is I will explain about the descriptive analysis. We have in total 29 observations and we found that the standard deviation of all variables are relatively smaller than their mean. This illustrates that there are lower chances of the variability of all the data. We also do regression on our variables between Malaysia growth rate as dependent variable and foreign domestic investment (FDI) with domestic investment as our independent variables. We did the regression analysis to identify which variable are more significant and which variable are matter the most to the dependent variable. As shown in the table, the first variable, which is FDI, display that if there are 1% increase in FDI, it will make the GDP growth increase by 0.02%, while the domestic investment coefficient illustrates that the GDP growth is going to increase 0.9% if there are 1% increase in the domestic investment. So, from this regression result, we can conclude that the domestic investment are more significant to the GDP growth as it contributes the most to the GDP compared to the FDI. Okay, next, moving to the stationarity test. As mentioned before, we use the augmented decay fluid test ADF to employ an econometric approach for empirical analysis. So here is our hypothesis for this test, which is the H null shows that the unit root is present, while the H alternate shows that they are stationary in trend. So, we regress the ADF test in constant only and using constant with trend. With the same leg, which is 1, the all variables reveals that all of the series are non-stationary since the null hypothesis for all of the series are not rejected at the 5% levels of significance. Okay, for the last part of this empirical study, we want to identify if there is relationship between the independent variables and dependent variables, and thus we run the correlation test using Pearson correlation test to find the result. As you can see in the table, at the 5 significance level, the correlation between the GDP growth and foreign domestic investment is 0.2123. This emphasizes that there is positive relationship between both of them. Similarly, the correlation bounded by GDP growth and domestic investment is 0.45 at 5 significant levels. It also can be considered as significant. Both independent variables are significant to the dependent variables. However, we can see that the relationship between GDP growth and domestic investment is more significant compared to the relationship with foreign domestic investment. Okay, that's all for my part. I will pass to the next presenter. Thank you.
Assalamualaikum and very good day. My name is Novatina Nadira binti Muhammad Nasir and my matrix number is 263783 and I will present about the conclusion of our study. The conclusion is the relationship between the foreign domestic investment and domestic investment show the positive reaction towards the economic growth. So how to improve our economic growth? So the government has to attract more foreign investors to invest in Malaysia. Second, the policymaker has to make a new strategy to outstanding of foreign domestic investment and also domestic investment to the economic growth. And the last one is the government has to guide the local investor to promote their business and also develop their skill to participate in the foreign domestic investment. So that's all from our group. Thank you.